Hello. We come into the new week, three major themes that I'm looking for at the moment. What's happening in the commodity complex? You can't get away from it. It's really the big talking point at the moment. Everyone knows what's been happening in the WTI, the Brent price, where OPEC left its target rate at 30 million barrels a day. And clearly there's political implications of what's going through. But Brent prices and WTI prices fell fairly hard from Friday's equity market close here in Australia, probably down about 3 or 4%. So that clearly needs to be priced into our market. But I think you now need to look at what's happening in copper. Copper price looks exceptionally bearish on the daily chart. We're trading at 284 per pound at the moment. It's making lower lows and lower highs. That's not a good situation at all. And I think if you mix that in conjunction with what we're seeing in break-even rates, the 10-year break-even rates, or the bond market's way of looking at inflation expectations over a certain period, are at 1.8% over a 10-year. Now this is very much emblematic that we've been seeing where levels where the Federal Reserve have imposed further quantitative easing. So I think that's something that needs to be bear in mind. And the fact that you've got the 10-year US Treasury now trading at 218 probably tells you quite a clear picture. The German German bond at record lows, spreads in Spain and the peripheral really coming off quite sharply as well. We've got the ECB meeting this week. The market will be looking to see whether or not they can sustain the momentum in the euro. What we heard from the weekend from the ECB is that the barriers to entry are still very high for that. I think we still need to look at covered bonds, uncovered bonds, and then of course corporate bonds further down the line, which need to be added to get that balance sheet to the levels that we saw in 2012 before they even think about doing quantitative easing. And if you look at what Mr. Constantio said last week, they will look to see these measures take place before actually making an assessment sometime in Q1. So I think that seems to be the playbook in Euro. But I think what's happening now is that we have got a bit of overcooked. I think what the other big thematic that I'm looking at is what's happening at a central bank level, the divergence we're seeing there, but also at an economic level. So we all know what's happening at the ECB, we all know what's happening at the Bank of Japan, and we know at the other side of the scale the Federal Reserve are looking to tighten some stage in Q2, maybe even Q3 of next year. That seems what the primary dealers are suggesting at the moment in the Federal Reserve, the guys who deal directly with the Fed. Therefore, we've got to look at what the payrolls number on Friday is going to be. It's not just about the headline number where the market's expecting 228,000 jobs. You've got to look at the fact that the average hourly earnings are expected to be at 2.1%. This is still too benign for the Fed to really get excited about raising rates anytime soon. Remember, the Fed want to see 3 to 4% from that before they start to raise. The other big situation is what's happening in China. We get China PMI numbers today expected to be at 50.5. If we get anything much lower than that, then certainly there'll be this, perhaps the prospect of bad news equals good news for the Chinese equity market. If you look at the A50, if you look at the CSI 300, if you look at the Shanghai Composite, those markets are on fire. That is the equity market that really everyone needs to be looking at the moment. The Indian stock market also looks quite good. But certainly from that perspective, the Shanghai Composite had $116 billion worth of value going on Friday, which is the most I think they've had for quite some years. That market's on fire at the moment, and I think continued idea that stimulus is going to come through in the shape of reserve ratio requirements at some stage in the next couple of weeks really keeps that market being buoyed up. And if you look at the broker side of things, such as CITIC, up 10%, that really shows you a clear picture as well. So I think they're my three themes. What's happening in commodity prices, what they're going to do to global forecasting is very, very difficult. What's happening at a divergence at a central bank level, and also what's happening in China as well, I think is the interesting thing. But elsewhere this week, in Australia, we've got a lot of data to go through. Tomorrow's RBA meeting will be very interesting. Philip Lowe, of course, recently suggesting that they can cut interest rates if required. They still believe that would stimulate the economy if they need to. The market's pricing about a 50% chance that they do cut at some stage next year. We do get a Q3 GDP number now. That's expected to be at 70 basis points, or 0.7%, 3.1% on an annualised basis. Clearly, this doesn't suggest that we should be getting cuts anytime soon, especially when the non-mining space is seemingly okay, given what we saw from the capex numbers. We get the retail sales spending at 0.1% later this week, and then trade balance. So plenty to look out for. Certainly the Australian dollar looks like it wants to go lower. If you look at the daily chart, it looks really, really quite negative. The trade for me, though, is what's happening on euro against the Australian dollar. We quite like, or certainly I quite like euro against the Aussie higher in the short term. I think if we're taking a 12-month view, I think probably the trade for me, the outstanding trade right now, is being short Australian dollar against the Canadian dollar. The idea that you're going to get growing divergence there as well, I think seems to be quite an attractive trade for me right now. So they're the things I'm looking out for this week. I think on the Fed side of things, you can look out for conversations tonight from Bill Dudley on his outlook. You've got Charles Plosser and Richard Fisher from more sort of from the hawkish contingent. You get Loretta Meister Stanley Fisher on Friday, so again that's going to be driving things as well. So they're the three thematics that I'm looking for this week, but of course central banks rule the airwaves and they're going to be fully in play this week.